Hey everyone, it's Luron here and welcome back to my channel. Guys, in today's video I want to cover your favorite meme stocks. That's AMC and GME. Now these stocks are set up perfectly when it comes to technical analysis, and this video I'll be going over the charts to show you guys exactly why you need to pay extra attention to the levels that these stocks are at right now. Now on Friday, both GME and AMC, specifically AMC, closed at a very critical level. And if you were someone that is trading this stock or invested in this stock, because I know there's a lot of longs on this stock. Now I'm not a long, let me put that out there right away. I'm not a long on this stock. When I say not a long on me, I'm not an investor in this stock. I trade this stock a lot though when it is set up perfectly at technical levels. Now let's jump right into the charts, guys, and I'll show you guys exactly what are the levels that you need to pay special attention to. Now before I get into that, guys, all I ask in return is that you guys smash that like button, destroy that like button, because it helps with the algorithm, it helps the channel to grow, and that's the only way I could continue to bring you guys premium level content on these stocks. Now if you're new to the channel, guys, make sure you subscribe. That's the only way you can be notified of future videos. Now let's jump right into it, guys. Enough of the rambling. Now AMC, this is the first one I'll be looking at. AMC, as you guys know, this stock has been on a run like we've never seen before. Now all the way from January of this year all the way to its peak back in June, this stock is up 4,800%. Guys, that's ridiculous. That's to the moon. That's the definition of when you say the stock is going to the moon. That's what it means, guys. It's literally up there. Now, if we look back at the charts, I like to look at the charts because I get all the answers that I want from the charts, right? Let me show you guys here. Back when AMC was, spiking tremendously, it went up, 500%. As you guys see, the stock came here. We did a head and shoulder, and it's a clue I'll give you guys. It's not a clue, but it's a secret that the market uses with these head and shoulders. Now, by default, everyone knows that a head and shoulder is a bearish pattern. But for these growth stocks, these high momentum stocks, when they do head and shoulders in the backside of the move, watch it for that breakout, guys. So we had this big run up. That's the front side of the move. The back side of the move, we have a head and shoulder. And that was back in February all the way to May. You see, we had one shoulder here. We go up, we have a head. And then we have the second shoulder. We kiss the line here. There's a lot of technicalities into determining what's your angle. That's for a different video. But basically, we did a head and shoulder and we broke out, guys. Once we broke out, you guys see what happened there. Now let's move fast forward here to what's going on right now again, guys. Big run up. We could consider this the front side of the move. You see there, guys, 600%. Very similar to the big run up that we had before. We had 550%. Now we got 620% as the big run up from this breakout. This is the front side of the move now. Now we're in the back side of the move, which is the back end of it, right? Now in the back end of the move, unless you have a complete head and shoulder, which everyone thinks is bearish, that's where all the literature out there is telling you, oh, the head and shoulder is bearish. Now I have studied, guys, with over 1,000 charts with these high momentum, high growth stocks, and it'll show you that these stocks break out more time than not with these head and shoulder. But everyone gets bearish. Now I'm not saying this one is bullish. Now look at here, guys. This is the setup. This is the angle. This is the calculated angle for AMC right now. I've done my calculations. Like I said, this is my specialty in technical analysis. Now this stock is at a critical level here right now. And if you want to buy this stock, you can buy this stock. But the upside for it right now, I can tell you what the upside is. The upside is basically back to that level, which is 21% in the next 12 days. This stock will find resistance here in this line. We have 1, 2 connections there. That's our wedge. It's almost a symmetrical wedge, but we have the head and shoulder built into this symmetrical wedge. If the stock breaks this line, which is our primary support line, it's over, guys. It'll roll over. It'll probably bounce a little bit to fake you out to think that it's breaking out again, but it'll roll over and it'll go down. I don't know how far down it'll go, but it'll basically roll over and get lower, at least back to these levels at maybe $28 to $29. But the setup that we're seeing right now, as you can see, I put some arches there, is the head and shoulder, guys, within the wedge formation. This is one of the biggest plays out there. That's what I trade. That's what I've studied over the past 2 years, and that's where I have over 1,000 charts printed out that shows me that showed me the exact results that we get on these, and these are massive explosion. That's where you get this, right, out of these head and shoulder breakout wedges. So for this one, I've bought some stocks on this one. I didn't buy options, and like I said, you have 20, let me measure that again, 21% to the upside before it finds resistance. Now it has to kiss this line again, then it'll come back down here, touch this line again, and then we'll break out. If we get a complete head and shoulder, I'll be buying some serious options because we got earnings coming up here 9th of November. I can buy some serious options for first this level and then back to this level at 60 bucks. But like I said, your risks, you remember when I show you guys video, nothing is guaranteed, right guys? Always have a trade plan, and your trade plan is very simple. You need to manage your risks. Now this line here, if you have anything opening below this line or closing below this line, that means that the stock is going lower. Now you want to buy in here, and if you want to sell as it kisses this resistance line, because like I said, that's resistance, and we have 21% to the upside. So entry, exit, and you have risks right outside this line that I'm drawing here. So that's my analysis, guys, and come back sometime mid-October, and this stock comes around here, pushes up, comes down here and kiss this line. Watch out for the breakout, guys. Watch out. So that's my analysis on AMC, guys. It did it before. Like I said, this behavior happens on thousands of stocks that I've tracked. It happened there already. It's about to happen again. GME is no different, guys. If I pull up the GME, we had the same thing. Big breakout. We have the head and shoulder. We break out. Break down again. We got a head and shoulder forming again. We got the shoulder here. We got the head. And then we got the right shoulder looking to complete once it comes back and kiss this line. And then we can expect GME to move higher to the upside. So that's my analysis on AMC and GME, your favorite meme stocks. And guys, if I earned your thumbs up, please remember, smash that like button, subscribe if you're new to the channel, and until next time, we'll talk again.